Investor Intelligence provides general information only. You should consider seeking independent advice to see how this information relates to your unique circumstances. Please refer to the terms and conditions available at investorintelligence.com.au for more.
Welcome to this week's episode of Investor Intelligence, your weekly podcast on all things investment, hosted by me, Jacob Kearns. Today we're going to be diving into a pressing issue which is affecting countless Australians, which is the rental crisis. With housing affordability becoming an increasingly challenging problem across the nation, we're going to be discussing what's causing the issue, what it means for both investors and renters, how it might impact your investment strategy, and what to look out for the future. And according to CoreLogic, vacancy rates have fallen to 1.3%, down from 2.9% in the last decade, which is more than a 50% decrease, while data from Domain is showing rental prices have increased by 13.2% in this past year alone. Now, today, I'm joined once again by the CEO of the Property Mentors, Luke Harris. Welcome back, Luke.
G'day, Jacob. Thanks for having me back.
And I've also got with me the Director of Property Management at Harris Property, Renee Whitehouse. Welcome back, Renee.
Thanks for having me, Jacob.
So, Luke, how has the rental market in Australia evolved over the years, and what changes have you observed as an investor?
I think what we've noticed more of over the last, let's say if we wind back the last 5 years or so, having COVID and various other things that have impacted us, such as interest rates, we've seen a lot of changes in the fact that during COVID, a lot of people were scared of what was happening. Before that, the couple of years before that, the property markets were humming along and just doing what they do in a normal property cycle. COVID happened and it just scared a lot of people. So I think 80-90% of investors just stopped investing for a period of time. And I guess people that have were able to put COVID and all of those issues and risks aside, continued to invest. And I was out there during COVID buying property. I bought more properties during 2020 than I bought in any single year previous to that. So the follow-on effect from that was that coming out of COVID, there were less properties available for rent. A lot of people decided to sell because they were panicking, which took rental properties off the market. And of course, following on from COVID, 21, 22, we've seen, and throughout 2023, we've seen interest rates gradually increase, which has scared a lot of investors from buying new investment properties and has also caused a lot of people to sell out of that market. So that's impacted the rental market in a lot of ways, including increased rents and a shortage of properties.
Okay. And so what's actually causing the shortage?
Well, there's no single answer to that. The shortage really does come a lot from developers not releasing new stock. There's been a lack of government support for releasing new land and getting new developments off the ground. And really what we've seen for the last few years is that developers have decided to sit on the sidelines like a lot of property investors. So a lot of property investors throughout COVID said, look, I'm going to see what happens. I'm going to sit on the sidelines and kind of just not put my toes back in the water just yet. I'm going to hang five and just take time out. And investors and developers are often quite similar in that not all developers are big commercial developers with tens of millions of dollars behind them. A lot of developments actually happen with small mum and dad developers and small super funds and things like that will put their money together, and they operate their property developments the same way as an investor, and they use their emotions to make their decisions. And a lot of that has caused a lot of small developments to not proceed, which hasn't caused the issue in itself. But it's definitely contributed to that with a lot of developments actually not proceeding. So we're starting to see that the supply side of things is starting to pick up again. There's confidence coming back in the market. But I think that the lack of stock coming on the market, new projects starting, has actually really impacted things.
Okay. And what about the demand side?
The demand has actually been, I guess, unprecedented in a way that people really weren't expecting things to be the way that they are right now, in that people, the migration from overseas, people, the borders are open again and have been for quite some time now. People are coming back into Australia, they're going back to university and going back to, I guess, pre-COVID type of days. And the demand side of things is just insane right now. It's a really high level. People have decided to change. COVID really did once in a generation shake up of how we operate and how we do things. And I guess through that, people have changed where they work, how they work. A lot of people working from home, a lot of people working remotely. People like myself have moved to a rural centre up in North Queensland, and you've got the ability to do Zoom meetings and video meetings now where people just weren't really comfortable with that previous to COVID. So that really has shaken a lot of things up, and a lot of people have just decided through this COVID period to just really look at their life, stuck in a lockdown if you're in Victoria in particular. Spending all those days at home thinking, do I really want to do this career? Do I really want to do this job? Maybe I want to live somewhere else. And it really did force people to think about where they're at with their life and maybe shake things up a little bit. And a lot of people did that. And I think that has really impacted the housing market in a really unexpected way, because people have moved, they've changed, they've downsized, some people just couldn't keep their jobs. They didn't want to get vaccinated, or a huge range of different reasons, but a lot of the flow-on effect from that has impacted the property market. Nobody could really predict that we would be in the position that we're in right now.
Yeah, okay. And Renee, what does this look like? Obviously, you work very closely with both renters and rental providers. What does it look like from your perspective?
Over the last few months, it's actually been quite insane with the number of people attending our open for inspections. There, as Luke was just saying, the housing shortage has really shown us what the market is missing. So we are seeing numbers of at least 20 to 40 groups at open houses, but it depends on obviously the price point, the location.
And what would be a normal show up for that sort of thing?
To give you an example, Rachel, my colleague, and I, we had a 2-bedroom apartment in Hughesdale and also one in Ormond recently where we had at least 30 groups. So that's at least 1 or 2 people per group. So we had 50 or 60 people through the inspection. A couple of weeks ago, Rachel and I did an inspection, a 3-bedroom house in Cranbourne East, and we had, again, at least 20 groups through. So, and those price points, both of those properties that I was just talking about, they're within our average rental range of properties that we manage, around the $450 to $460 per week mark, which is a very popular price point, particularly for young couples and young families that are wanting to either move out of home and get into the market, or people who are downsizing, or they just need a bigger space.
Yeah.
With those, just for those people listening from another state, whereabouts are those in comparison to Melbourne, those properties, so southeast?
So yes, southeast.
Yep.
Yeah.
Okay. So Hughesdale probably
Hughesdale and Ormond, they're probably 30-minute drive from the CBD. Yep. Cranbourne East is probably about 45-50-minute drive, depending on time of day.
Yeah, so these are not inner city properties, and they're not, these are not massive lifestyle precincts and the high demand properties. These are, I guess, run-of-the-mill kind of average properties. They're in well-located areas and they're good investments for the investors, but there's nothing super flashy about these particular properties. They're just normal properties. So I think that demand really shows that Melbourne in particular, and we've been saying this for the last decade, is going to be the most populous city in the country. It's going to overtake Sydney, and mark my words, it's going to happen. And when it does, it's going to be all over the papers. And then what's going to happen is we're going to see the official announcement that Melbourne is bigger than Sydney, and that's going to be a huge mindset shift for a lot of people. In that Melbourne is still more affordable than Sydney, but it's going to be a bigger city. Melbourne has more room to grow, and I've been saying this for probably the last 6 to 12 months, is there really is a last window of opportunity over the next 1 to 3 years for people to buy in Melbourne, because prices will start going back through the next property cycle, and it's going to be too expensive to get into Melbourne, and it will become not just Sydney being too expensive to buy in, it'll be Sydney and Melbourne. And you won't be able to buy in Melbourne anymore. And we'll have to look at other markets, and there's other markets on the radar. But for those people that are looking to invest, I really think now's a great time to get into the Melbourne market.
Yeah. So in terms of the housing shortage, how bad is the situation?
Well, how long's a piece of string? I think it does depend on what areas you're looking in. Renee will know better than me, but of course, when you're looking at certain markets, there's markets within markets. So if you look at the suburb we're in right now, which is Paran, inner city Melbourne, 4Ks from the city. There's the housing market in Paran. Rentals are probably $2,000 a week for a house, whereas you can get an apartment for $400 or $500 a week. So within that, there's very different markets. Okay, so how bad the shortage is, a lot of markets that we're in right now and where we're looking for investments for our members, the vacancy rates are below 1%.
Yeah.
And a balanced market is around 3 to 4%, 3.5% roughly. So what that means is that at the moment there's less properties than there are availability, and there's more tenants basically looking for that same property. So that has put a bit of pressure on prices, and we'll probably talk to that in a second. But essentially, the way that the media portrays it as a crisis is probably not correct in every market. They say this housing crisis, and it's this crisis, this big, scary thing. But property cycles change from time to time. You might have an area that goes through a shortage for a period of time. It might be 1 to 2 years, and we're experiencing that in a lot of areas right now, and a lot of pressure as people are sort of readjusting again, still after COVID. I know it is trying to be in the past for a lot of us, but it really is still people adjusting to that. And during that time, there's been a lot of changes to laws and regulations around what landlords and property owners can do, rental increases and things like that. So there's sort of still seeing this stabilising effect. So how bad it is, it really depends on which market you're in, which city you're in as well.
Okay. We'll talk a bit about what the future might look like, but often when people hear about these rental increases, they think that it's great for investors because they're earning more money. Is that the reality?
Well,
it's definitely not.
Yeah, definitely not that people... Look, a lot of people have the term, if you jump on any of the Facebook forums or anything like that, greedy investors and people, the government's fault about, letting people own more than one property. I guess the way to sort of summarise that from an investor's perspective, and I try and keep an open mind looking at both sides of it, but the reality is that supply and demand is it's a free market thing. We live in a democracy and we live in a free market. That's what the world that we live in. So supply and demand. We use the example in my book. Let's Get Real. We talk about bananas right after the cyclone happened in Queensland a few years back, 2017. Bananas went up to $29 a kilo. Right, and if you eat bananas every day, you'll probably still go and buy bananas. You just won't buy as much of them. All right, it's the same thing. Now they're $3 a kilo. Nobody cares. You just go and buy as many bananas as you need. But the same thing is, people still want to go and rent a property. Some people need to rent a property. Some people choose to rent a property. But the reality is that when there's more demand for something, the price goes up. Now that doesn't mean that landlords are taking advantage of that. It doesn't mean also that people aren't taking advantage. Some people are. There's a lot of people that are just taking advantage and putting the rents up. But the reality is that costs have gone up as well. We've had huge inflation over the last 12 to 18 months, and that has impacted on council rates. It's had an impact on insurance premiums. It's had an impact on every other expense that a landlord has to deal with. And I guess the flow-on effect from that is the increase in cost, but also the increase in demand for rentals as well. And probably, Renee, you can speak to the increases and how they've impacted.
Yeah, after having several conversations with owners over the last 12 months at least, when we look at increasing rents, we obviously look at what the market conditions are doing, and if we're managing several properties within the same estate or area, we'll use those as comparisons as well. Owners are asking for significant increases. Sometimes they're not valid, and I would point that out to them based on the comparables. And with the new legislation, with us providing the tenant with a rent increase, we also have to provide evidence to show that it is deemed this value. Right. And we often provide them with a report to show that, this property, that's a comparison, leased for X amount in the same building or down the street. So in that regard, I think it's a good thing that we do have to back it up because, as Luke was saying before, we do have some owners, not ours, but some owners that we hear about that are increasing rent significantly without the backup to prove that it's worth this amount. But also, some of those owners may not be improving the property. They may be letting maintenance slide, whereas a lot of our owners that we are having these conversations with, they want to increase the rent by X amount. And I'm like, sure, we can do that. can you please organise for this to be repaired, and I'll arrange, or
It's
it
gotta be
depends.
justification for
Correct.
it. It's got to be, look at everything. When we're talking about property investing, I always look at it from a win-win perspective. If it's a win-win, then it's going to work out. If it's not a win-win, it's not going to work out. So the tenant's got to get some benefit for it. I think a lot of tenants also know now that when you are presenting comparable properties, a lot of tenants actually realise the position that they're in, and a lot of people are thankful that they're actually in a property, because if they had to go back out in the market, I know up in Early Beach where I'm living now, that a lot of people have even said to us, properties that we manage there as well, they've said to us, we don't want to move. We know there's nothing else available. Please don't kick us out. So it's not so much about the cost that they're paying. They're just saying we want the security of having somewhere to live. And there's a lot of people that are in some of these properties. If they have to vacate for any reason, they have to move out of town. And we're talking 20, 30 kilometres out to a different town, for example, and a lot of people, they've got kids in school, and it is affecting people's lives, and I guess the anxiety of having that hanging over your head as a tenant, I can see how that would affect a lot of people. So I think the rental increases, if they're justified and they can match market conditions, as a property manager, you've got an obligation to, I guess, keep up with the market conditions. If the one next door rented for $50 a week more, then you're doing a disservice to the landlord. So it's a tough balance to try and get the balance right between looking after the tenant, looking after the landlord. But I think the reality is the market conditions are what they are. As much as we'd love to have a silver bullet that can come in there and fix all of the country's problems, we do have a government that we pay all of our taxes to, a substantial amount of taxes to, mind you, and it really isn't the individual property owner's responsibility to fix that. Whilst myself as a landlord property owner, I have a contribution to that, I can't fix all of the problems. So we have to do the right thing by our tenants, and we do. We've done plenty of things over and above for our tenants, and make sure that they're happy and that they're looked after and they're comfortable in their homes. And of course, the legislation changing rent increases to once per year, I think that's given people a lot of stability. I think on the flip side, Victoria was first with that, probably about 2 years ago now.
It was actually, I think, about 4 or 5 years ago that they brought that in.
Queensland's just followed suit. I think WA is doing the same now, and I'm sure Sydney will be in there in the mix as well, New South Wales. But I think on the flip side to that, yes, you can only increase rents once a year now. But I think what that means is that tenants are going to get hit with bigger rent increases, because they sometimes you would have, when I was renting throughout my 20s, I was out there investing in property and renting myself, I would get an increase of $10 or $15 every 6 months, and I was okay with that because it was a gradual increase. Now, if you can only increase once every 12 months, what we're doing is looking at comparable properties. Over a 12-month period, all of the surrounding properties have actually gone up quite a lot. So people are getting rental increases of $50 or $100 potentially, or even more, depending on the property. And that's a big shock to them because you don't have that rental. So I think whilst the governments have tried to get involved in solving the problem, or they're saying they're solving the problem by having rent increases capped at once a year, I think they haven't really looked at the big picture on how that's actually going to work.
They really
haven't. They've come out saying, look, we've made all these changes and we're here to protect tenants, but the reality is that if the landlord has a legal right to increase the rent every 12 months, they're going to look at comparable rentals in that market. And that means probably bigger increases, but less frequently.
You're right. It's just going to delay it. And as you were saying, with the free market, it's always going to do what it's going to do. There's pros and cons to capitalism. But in terms of the costs for investors going up, a big part of that is interest rates too, right? As you mentioned, would you say that the loan repayments that investors are repaying on their loans, is that more or less than the rental increases that they're doing? I mean, obviously it's hard to say, but...
Well, it's not hard to say for me. It's substantially more.
Okay. Yes.
So interest costs have gone up substantially more than any of the rents on any of my properties. And, we're talking across 30, 35 properties. The mortgages have gone up on all of them. The rents have gone up nowhere near as much. So some cases, the mortgage payments for a lot of investors have almost doubled, right? And they're still at that higher level, and they might have put their rent up by $30 or $40. It's still nowhere near enough to keep up with that. So when people are putting rents up, a lot of people are looking at one side of it in the media and online and Facebook forums and all of the dark places on the internet that you don't want to go to, that talk about greedy landlords and all this. Governments should be looking after tenants and all this sort of stuff. But the reality is if you look at the increasing costs, council rates, when I was a lot younger, council rates were $1,000, $1,200 a year. Now most council rates are somewhere $2,500 to $3,000, and some properties that I've got are $6,000, $7,000 a year for council rates. And a lot of tenants don't see that, and I get that, right? It's not the tenant's responsibility to care about that, but things like insurances and repairs and maintenance, all these things have been affected by inflation over the last 2 years. And all of these costs have gone up. Insurance in particular, some insurance costs have gone up by 60, 70%, and that does have an impact on investors, both psychologically and also at the bottom line, out of the bank account, literally every single month, whether you've got a tenant or not.
Yeah. So how has this influenced your investment strategy?
Mine, look, I always take a long-term perspective with all of my investing. I've been investing for 23 plus years now, and I always take a long-term approach, very much slow and steady approach to what I'm doing. So it hasn't affected my strategy as such. It's still business as usual. I'm treating it like a business, and I don't get it affected by the emotional side of things. It has made me more diligent with my figures. Making sure that I'm checking and double checking my figures, and making sure that I'm having more conversations with my accountant, more conversations with my mortgage broker, to make sure that we're on track as a team. I don't try and do everything myself, but really the long-term view hasn't changed. Continue to invest in property, continue to buy properties and invest wisely, take a conservative approach. But interest rates going up, inflation, government decisions, change of governments, all of these things are going to happen whether we like it or not. And I think a lot of people let these things get in the way of their investing strategy, and they'll make their decisions based on what's happening in the market at any given time. And it's not a smart way to invest. And again, you've got to look at a long-term business approach to your property investing and try and put these things to the side. Slow and steady wins the race. And I'll say that till I'm blue in the face. And a lot of people are looking to make a get-rich-quick sort of thing in the property markets, and it's just not how property works.
And this is just like the property cycle that you always talk about.
Absolutely.
People have to factor it in.
You have to, and look, there's going to be periods of time over a decade where the timing's right, everything's going smoothly, rates are good, rents are good, vacancy rates are about right, and everything's humming along nicely. But there's periods where the properties markets are going up, properties are increasing in value, and it's all looking great. But there's periods that we're going through right now, all of this year, all of 2023, interest rates have just been going up. Costs have been going up, inflation's been in the media, all of this stuff has been happening, and people have been spooked by that. I get it, I completely get it, but the reason why people make these emotional decisions is because they don't have a clear attachment to that long-term plan. And when you've got the long-term plan and you've got a good team of people around you, it's easy to stick to that plan and not let the emotions get in the way. And I can see a lot of people this year have been spooked, and they've been worried, and they've been tight on cash flow because these costs have been going up.
Yeah.
I know with our portfolio that we look after, there's been several owners that have either had to move back into their properties or they've had to sell due to the holding costs. It's just been too much for them.
Okay.
Have a burning question you want answered on an upcoming episode? Each month, we take questions from our listeners and put them to our resident expert, Luke Harris. With more than 2 decades of residential and commercial investment experience under his belt, Luke has seen the best and the worst of the property market. Visit investorintelligence.com.au/questions and ask us today.
In terms of a resolution or a bit of a medium-term forecast, obviously the RBA is forecasting that inflation will come down to their targets by mid-2025. Can't really predict what they're going to do with the interest rates, but that is the reason why they are increasing them in the first place. So hopefully that will be good news. In terms of the housing supply, how do you see this playing out moving forward?
It's an interesting question because there's no simple answer to it. I think the supply side of things is starting to ease up in some markets around the country. However, there's a lot of markets around the country that there's no new supply coming on. So rents are going to remain high for some time. What's going to happen though is that, like you said, inflation will start trending downwards over the next 12 to 18 months. We will start seeing interest rates dropping. We'll start seeing probably by the middle of next year, we'll start seeing some decreases in interest rates, which will take a bit of pressure off the owners and allow new owners to go out there and buy investment properties again. Will give people confidence. And a lot of this is confidence driven. When you see interest rates going up every month or every 2 months, you see inflation trending up, people are scared. right? And that takes confidence out of the market, and a lot of people, including developers, don't have the confidence to go out there in the marketplace. And if developers aren't going out there doing small projects, 3 and 4 townhouses or small apartment buildings, then that means the supply side of things is going to be constrained for some period of time. So I think what we'll start seeing is 2024 is going to be better than 2023. There's still opportunities in every market. I'm still buying property this year, and I'll be buying property next year. But the reality is that when interest rates start going down, people are going to dive back into the market again.
Yeah.
And they'll start seeing confidence in the market. And what that means, unfortunately, is that when more people are getting back in the market, supply and demand, once again, prices are going to start increasing because there's more buyers for less properties. So, changing the development cycle, the development pipeline for putting new properties on the market, releasing new land, putting new houses and townhouses on the ground takes a while. It takes 3 to 5 years to go through that whole cycle and to start delivering more stock. So if people have been sitting on the sidelines and people are only now starting to think about developing property again, that means the supply side of things is not going to be resolved in the next 1 to 2 years, even 3 years. We're really talking 3, 4, 5 years before the supply side really starts picking up again. And that's assuming that things stay the way that they are, right? There's international conflicts and wars and things going on that could affect things. There's government changes that are going to happen. We've got a US election coming up next year, which is a bit of uncertainty. So there's always going to be uncertainty out there. No one really knows what's going to happen. But the reality is, if you're looking at your own personal situation, managing your risk, getting good advice, getting a good team of people around you, then you can still go out there and make money in property in 2023, 2024, 2025 and beyond.
Yeah.
What advice could you give to landlords that don't want to spend any money on their property? Like the dishwasher's broken, the air conditioning's broken, the fly wire's broken, the flies are getting in.
So the other day we received an email from a client who was a bit of a terse email because I had sent them their monthly statement because we'd received the rent, but I paid all of these bills from the rent for them, which is what they asked us to do. So I paid their owner's court fees, their council and water rates. And at the end of the statement, it said that they received zero money because I'd paid all of those bills. Yeah, it was a bit of an upsetting email from their perspective because they were expecting to receive some money, obviously, to pay their mortgage. But at the end of the day, they need to factor in all of these other costs that are associated with owning a property, particularly an apartment, because obviously you are paying owner's court fees. They need to factor in all of those costs throughout the year.
Yeah.
Yeah, I think a lot of people put it on you as a property manager to make sure there's money in their account every month. I think the surprising thing, and you did share that email with me, and I think the surprising thing is that people are just expecting all of the rent comes in their account every month, whereas they've given you instructions to pay all of the bills. I think a lot of people sort of hand over their property to a property manager and then to a certain extent set and forget, right? And they just forget about everything. When you are investing in property, especially if you're new to investing in property, you've got to be aware of all of your expenses. You've got to know when your council rates are due. You've got to know when your water rates are due and all of the other expenses that come out of that property so that you can manage your cash flow. And I think the way that email sort of came across was, Renee, there's no money in my account. It's your fault. What's going on?
That was basically
literally following your instructions to pay the bills for you. So you've got to know when the bills are coming out. You've got to manage your own cash flows, and I think that does come as a bit of a surprise to people when, and I've had this many times where there's literally no rent transferred for the month because all the bills have been paid. But at least I'm aware of when those bills are due, and I know that month is going to be either low or no rent. But I think from an investor's perspective, the more you are aware of your financial position, the more you know when your bills are due, the more you're on top of these things, but also have a buffer in your account. You can't be running dry every month so that you've got no money left in the account. So make sure that you have a buffer to get you through those times. And I think a lot of people probably forget that they are actually the owner and they are ultimately responsible for that property and the bills that are due for that. Yeah. So,
and then another classic example is like you just mentioned, buffer. What happens if your hot water system bursts and you have to replace it? I had to organise one for an owner a couple of weeks ago and it was $2,000.
Wow.
So that on top of their council rates and their water rates and their owner's court fees as well, they need to factor that in too. So like Luke just said, it's really important that owners do have some buffer to assist in that situation if it comes up.
What impact are you seeing on properties where the owners don't want to spend any money on the property, but at the same time they want the rent to increase? How do you see that?
It's a fine line. Yes, I feel like a juggler because I'm juggling a situation like that where I'm getting information from the tenant that something's broken down, and then I relay to the owner. I organise a quote, and then the owner doesn't want to do it. But then, the lease is coming up for renewal soon, so the owner wants to increase the rent, yet they still don't want to do the repairs. So it's a very hard conversation to have with the owner, because obviously we need to do our job by informing them of what their legal rights are, because at the end of the day, they need to maintain the property within good repair, and then try and assist the tenant with the situation at hand. So it's a very fine line as to how it's handled.
Yeah, it's a bit unfair hitting your tenant with a massive or any sort of increase when there's stuff that needs to be
100%,
done. Yeah.
yes.
And it is a tricky period of time, because I've got properties that they've just been leased at the wrong time, where they might have been leased during winter, or I've got a beachfront property and that got leased one time during winter because the tenant vacated the property. This is 4 or 5 years ago now. The tenant broke their lease in the middle of winter, right on the beach. So nobody wants to go and get a beachfront property. So we copped a lower rent because we tried to get a tenant in the middle of winter, and we've always been trying to catch up from that, because if we leased it in summer, we'd get $100 a week more. So, those sorts of things can impact as well. But if you do have repairs and maintenance, you've got to make sure that as a landlord, property owner, you are aware of the fact that you do own a building. It is not something to set and forget. That building is going to have, it's going to deteriorate over time. You need to factor in repairs and maintenance, but also, every 10 or 15 years, probably more so every 10 years, you're going to need a paint of the building. You're going to need new carpet, some blinds and things like that, because they are going to fall apart and things are going to break. These are tax deductible expenses. You need to be aware that these things are going to happen, and don't be caught by surprise when you get a $2,000 call out for a hot water system. You should know how long a hot water system lasts. And I think at the end of the day, this is your job as a property investor to be across these things and take advice from your property manager. A lot of people will get advice from their property manager and ignore it until it gets so bad that it has to be done. And so sometimes a bit of preventative maintenance can save you thousands of dollars in the future.
Because then if you don't replace something or you don't fix something, and then the tenant moves out, if they're on a periodic lease, they only have to give a month's notice. And then the owner then has to be forced their hand to make that decision and repair those things. And the property could sit vacant longer, because no one would want to move in while those repairs are being undertaken.
Yeah, so just get on top of it.
Yeah.
Okay. To wrap up, Renee, do you have any advice for someone who is looking for a rental and finding it hard to get that accommodation?
Be presentable at an open for inspection.
Okay.
Do not park in the driveway.
You've mentioned that on this one.
I've mentioned it. It's a sticking point for me, because I find it to be quite rude. But with your application, when you put it through, if you're interested in the property, make sure you have all of your documentation attached, all of your employment history, rental history, all of the information ready at hand, so that we're not constantly chasing you up for that information, which then will delay the process. Because as I was saying before, if we're getting 30 odd people through and open for inspection, if we're chasing you for things, then other people's applications go to the top of the pile. So we want all of the information ready to go, so that we can present it to the owner. The other thing that I would also say is that I love a good cover letter. If you've got a
I was going to say that.
If you've got a dog or a cat, do a pet resume. Love those, because I always send those to the owner so that they get a better understanding of you as a human being, so that there is more of that emotional, I think, decision making when they get presented with an application. Plus, along with all of that, myself or Rachel would always give you our opinion as to what we thought when we meet these people at inspections.
So it's not always on paper, it's the presentation.
And that's why I say presentation first, because it is really important how you present yourself at the inspection, but also how you interact with us post that, whether it's on the phone, text, email. It's all...
Be polite.
Yes.
Be presentable.
Exactly.
I think I asked about the cover letter because I did that myself. And I thought, if I go to the inspection, I meet the property manager there, I have a chat with them, and then I submit my application with a cover letter. That worked a lot of the time. This was during the 2000s when I was out renting. And I felt that did help at the time. A bit of my background, this is what I do for a living, and this is where I work, and this is why I want to rent this property. It comes across a lot more professional, and it comes across you want that property, and you're putting your best foot forward. Right? You only get one chance. It's like a job interview.
I was just going to say that.
If you rock up in shorts and a singlet, and unless you live in Queensland, and we all do that every day anyway. But if you come up sloppy and you sort of don't look presentable, you've got to think, well, maybe that's how they're going to behave in the property as well. So, really put your best foot forward, put a cover letter on there. The pets idea, I love that because I've got pets. We've got millions of pets actually. And so anyone that does apply and they've got pets, if we hear a little bit about the pet and the cat and the dog or whatever's in the house, I actually appreciate that because I prefer them to be upfront about it rather than hide it.
Yes.
The tenancy laws have changed since I was renting, and I had a Labrador back then. It was very hard to get a rental anywhere with a Labrador. But look, having a pet resume is a great idea.
I like that.
Definitely with a photo.
Definitely with a photo.
Need
yes,
a cute
we
photo.
actually received an application from one of the houses we showed last week, and there's a photo of a cat on a couch with their little paws crossed.
Paws crossed.
Yeah,
that's
cute.
so
That was
cute.
Yeah.
Yeah.
Well, that's definitely even not the pet thing, but just the whole cover letter. It's a good way to stand out if you are getting 30 or 40 applications.
Yeah.
I think everybody's going to do that.
Exactly. And also what I will add is, I know that you and I have spoken about this, Jacob, some tenants, when they're making an application, they think that it's going to be better on their application if they're offering more rent. Obviously, with the new legislation, we can't endorse that at all. It's not allowed. But at the end of the day, if someone is doing that, we can put it forward to the owner. We can't then go and ask another applicant to pay X amount because this other person has offered it. But what I will say is that even if you are receiving an application with somebody who has offered, an extra $10 or $20 a week more, and we put that forward to the owner, that may not necessarily be the best applicant. So the owner should also take that into consideration and look at all of the other applications that we've received, because someone who is offering what we're advertising the property at, their references may be way better than the other one who's offered an extra $10 or $20.
Right. So it's more important to get a good tenant than a couple of extra $10, $20 a week.
The other good point on that just made me think that when a landlord's put a price on a property through their property manager, a lot of people will think, well, I'm going to ask a premium rent, which might mean you only get one or two applications, and you've got to choose between two bad applications.
Yes.
If you set your rent a little bit lower and set it at market rates and set it following advice from your property manager, you might get 10 or 15 applications. You get a choice of really good tenants instead of having to accept just the people that can afford it. And I think that's a really good point that, again, I've followed Renee's advice over the years and made sure that we're setting our rents at a fair market rent with comparable rentals so that we know that we're in the market at the right price.
Yeah.
And that way we get a good choice of tenants rather than just having to choose a handful of people that can afford it or only one application that can afford it. And I think that goes to being intelligent investor, which sort of ties into the podcast.
It does.
Being, investor intelligence is all about, making smart decisions and making intelligent decisions and, thinking like a business person. If you've got 10 applications at market rent, you get to choose, 3 or 4 really good applications in there, and you're not going to have issues with your tenancy just for an extra $10 or $20 a week for what might actually be a bad application.
Awesome. Well, it's been an interesting conversation, and it will be interesting to see how everything plays out. Is there anything either of you would like to add to wrap up?
The last thing I would add is just that when we're talking about a rental crisis and we're talking about these buzzwords that are happening in the media, we just need to put it into perspective. So just focus on the fact that market conditions are going to change, markets are going to change, and of course your own personal situation is going to change over time. So just make sure that you're not listening to these things and take it with a grain of salt, all of the media that's out there, and know that if you owned every property in the country, that might affect you. But you're going to buy 1 property or 2 properties or 3 properties over the next 2 to 5 years. So stick to your long-term plan. Don't let the media noise and the current market conditions get in the way of that. And don't wait. Don't wait for interest rates to drop by 0.1%. Which is probably what we're going to get, 0.1%, and then we might get 0.25%. These are small changes, and yes, we're sort of slowly going back to where they were 6, 12, 18 months ago, and they will be lower than where they're at today, but don't wait for that, because when that does happen, what will happen in the markets is that confidence will come back, and everyone else that's been sitting on the sidelines will come back into the market, and you'll end up paying more than that in the increased cost of property.
Yeah.
The supply issue hasn't been solved yet, and it's not going to be resolved in any time soon. There's still going to be demand for property over the next 1 to 3 years, and we're going to see prices rise in every market in the country.
Cool. Thanks, Luke. Thanks, Renee.
Thanks.
Thanks, Jacob.
If you found this episode or any of our episodes helpful, please make sure to share and leave a rating to help us reach more people on their investing journeys. And of course, subscribe to be notified when new episodes drop. Make sure to follow the podcast on Instagram at Investor Intelligence Podcast. You can find links to our other socials in the show notes, including a link to the Property Mentors weekly blog. If you're ready to get your property portfolio in shape for financial freedom, check out Luke's latest book, Property Fit. You can get yourself a copy at www.propertyfitbook.com.au.